Good morning, everybody. Happy Friday. This is my trading game plan here at verifiedinvesting.com. And my name, if you don't know me, is Gareth Soloway. I'm the chief market strategist. So today is the big day, folks. Jerome Powell's Jackson Hole speech today. That will be at 10 a.m. Eastern time. So again, all eyes are on it. Markets are trending slightly higher this morning going into that, with investors hoping maybe he will just be a little bit more dovish than otherwise thought to be. So let's dive right into the charts, folks, not wasting any time whatsoever. Taking a look right here, what do we have? This is the S&P futures chart. Now, what's interesting here is yesterday we had this very choppy day, right? A lot of ups and downs. Overnight, the S&P futures actually declined pretty sharply, putting in this beautiful technical bottoming tail. And then all of a sudden, the futures turned around on a dime and went higher. Now, in normal situations, if this was a jobs report morning, I would say some individuals got information ahead of the rest of us that the number might be better than expected. Now, with a speech, is it possible his notes, his bullet points got out a little ahead of time? It is possible, and we can all watch and see if that looks like the case. Like if the markets rally, then I think we can all look back at this and say, something went on here in the early morning where his notes got out on his comments, and we did see institutional or insider buying going into that. Interesting little tidbit there. Now, if we go to the S&P 500 daily chart, take a look. So here's our big trend lines. Our trend line, again, that goes back to 2023 in October and basically kept the market afloat all the way up until the Liberation Day sell-off began. And then we have this underbelly trend line right here connecting the low from May 25th to June 23rd to August 25th, and then to the last couple days. And notice how it did hold. So yesterday we touched it again. Amazing, by the way. Look at how price 2 days in a row went exactly to the trend line and held and then bounced up off of it. It just shows you that the trend line is a powerful entity. And by the way, because of that, it tells us that if it ever does break, we probably see not just a small move down, but a much bigger move to the downside on a break of that line. All right. So again, the question on the S&P today is it's holding support. So can it now bounce back to the upside a little on Jerome Powell's comments, or do we see him shock the market and be even more hawkish than otherwise expected, in which case we could see a break below? Now, what's interesting here is the S&P held this line, but the NASDAQ 100 closed below its line. So again, this is showing us that the tech sector is a little bit weaker, probably because money flow is coming out of the big caps where it's kind of been concentrated and going into more defensive names, which are other companies in the S&P 500. And I think that's a very interesting point here to make, is that, again, S&P held its trend line. The QQQ did not. Now, even though the Qs did not, the question we must all ask ourselves is, did you confirm a breakdown, or could it be a fake out? And the answer is, you can't confirm on the same day you close below. It would have to be today. So that'll be something that I'm watching for on today's QQQ NASDAQ 100 chart. Do we bounce back into the parallel? Do they save it essentially? Or if we sell off, do we close below yesterday's low, which would confirm the breakdown? And remember, folks, I always try to go into what the confirmation signal that I created tells me. It essentially is a probability indicator of whether or not it is a true, in this case, breakdown, or a potential fake out. In other words, sometimes institutions, and we've all seen this, folks, where a chart closes above that high, that previous major high, and everyone says, oh, it's a breakout. And then all of a sudden it gets whipped back down, and we're like, oh, it wasn't. It was a fake out, right? Well, this, again, the confirmation signal takes the chances of a breakout or breakdown from about a 60-40 chance, which is just slightly better than 50-50, to about a 70-75 to 80% success that it's a real breakout or breakdown. Very important indicator, folks. No doubt about it. All right, back to the charts we go. The dollar today continues to kind of float here just a little bit, trading within an upsloping parallel. Again, in general, we talked about this earlier this week. The down move in the dollar and this kind of chop is generally an overall bearish mid to longer term signal. But remember, you're still stuck within the parallel. So there's nothing that says it can't go up here to just over 100 or close to 101 on the DXY, or again, down to this support. So again, can trade in here, but overall, when this pattern forms inside of this, eventually you would expect a break to the downside. The US 10-year yield, that's a classic bear flag, folks. And again, doesn't necessarily tell us what will happen today, but it tells us over the next couple weeks that the general directional move on the 10-year should be to the downside. All right. So it's very important to understand that, because I know we're all expecting something big from Jerome Powell, but in all fairness, rates could go up a little bit back to the scene of the crime trend line, which is around 4.4%, or they could sell off a little bit. But the overall pattern tells us that the eventual move is likely. And I say likely because it's probability based, about 75% chance that it's to the downside. All right. Rates again on the 10-year should eventually head down based on this chart. All right. Next up, we have to talk about the Russell, guys. I am pretty bullish on the Russell right now, the IWM. It makes sense because if you look at the 10-year, if the rates start to go lower, that's very beneficial for small cap stocks. And again, the Russell is basically the small mid cap stocks, also the regional banks. So again, lower rates in that scenario should be bullish. And if you look at this bigger time frame, I mean, look at this chart going back to 2021. You have been stuck within basically a parallel of sideways consolidation on the Russell for a long period of time. Look at this. I mean, incredible. And now if you overlay this, I'm not going to do this, but if you overlay this with the S&P or the NASDAQ, I mean, the S&P and the NASDAQ, it's up and to the right. I mean, this is the NASDAQ chart, just, basically all the way up here at this point, right? Versus this Russell. And so the Russell has really lagged. And again, what I'm liking here is, number one, what type of pattern is this? Sharp up move, a lot of consolidation. It's generally bullish, right? And then on the other side, if we zoom in on this chart, we can look and say, okay, well, we have this high, which was your previous double top high from the IWM, the Russell. And if we drag it down to this former high right here at 226.65, we broke out, we confirmed, and we've retraced into the scene of the crime. And so for me, this is a bullish breakout with a retrace, and it should resolve itself to the upside. So again, listen, who knows what happens today? Like I said, folks, it's always a wild card with Jerome Powell, depending on how the market takes us. But the Russell looks very interesting over the next couple of weeks for a move just not back to the all-time high double top or triple top in this scenario, but even potentially further. Now let's look at something that doesn't look so good. The Nvidia chart. This is the intraday Nvidia chart, folks. You can see Nvidia is lower this morning by about $2 and change. This is after China basically said, hey, they said to their own companies, they said, we'd prefer if you don't buy the H20 chips that Nvidia is selling. And a lot of people are like, well, why? Wait a minute. The administration in the U.S., that we're going to get 15% of those revenues. I thought this was opening up China to obviously, pay Nvidia for these chips or these companies and bring in more revenue. But the essence of it is twofold. Number one, the H20 chips are kind of inferior. And so China's like, well, we don't want our companies to have inferior chips. And then number two is they're concerned, just like the U.S. is concerned about chips from China for security concerns. And so really it kind of makes sense in terms of that, of why, but it's obviously a negative for Nvidia. It's less revenue from China, and therefore Nvidia is down. Now, if we turn back to the chart on Nvidia, take a look at this. We have this longer term trend line that broke down, right? And anytime, and I said this many times over, but it's really important to say again, anytime you have a long-term trend line like this that's hammered on it so often, when you break it, it's usually not just a small move and then we just resume our uptrend. All right. Now, you can do a retrace to the underbelly of that. That's not unheard of. But in general, once you break, the chart is on basically a time clock for a bigger corrective move. And I actually have it priced in here that later this year, we actually should revisit this area around 153, which is our previous all-time highs before the latest breakout. And this is a classic breakout, retrace to the scene of the crime, and then the bulls, we'll see if the bulls can take over and propel it back up. Now, remember, Nvidia has earnings next week as well, so that will be something to monitor. Now, I got to look at this chart, guys. This is a great chart here on KWeb. This is one of my favorite charts right now. In fact, I continue to kind of inch in on positions here in KWeb. Earlier this year, I gave out a big breakout right here, and it had like literally within days of me talking about it in this game plan, we had this monster move up. Well, look at this. Look at this trend line. I think we're going to get a breakout here to the upside on these China internet stocks. And one of the other things I'm monitoring is, so we have this trend line, but look at this. If we go in a shorter time frame and we connect this high, look at this. It's right there. It's borderline downsloping trend line. And if you look at today where it's trading in the pre-market, we're above this. So I think you're going to get a breakout here on the KWeb. My guess is, again, this has 10, 20% upside within a few weeks written on it. We'll obviously watch and see. Likewise, Baidu, which is, again, another Chinese internet. It's basically the Google of China. This one has not broken out yet, but look at this downsloping trend line. Incredible trend line. If it can break out, major upside there. IQ was one I gave you guys a couple weeks ago. I said, guys, buy IQ. It broke out. It retraced into the scene of the crime. And then look at the move. I mean, that is an awesome move to the upside. $1.80 to a high of $2.50 on this play. It is already up, so I'm not really interested in picking this up again, frankly, because it's already run. But if it were to pull back, let's say to this previous, let's say $2, $2.15, then I do think it's interesting. All right, flipping over to earnings, there's not a whole lot to discuss here because there's not massive moves. Workday reported earnings yesterday after the bell, down about 4 to 5% on the morning session. In terms of a support level on this, I would really just be looking at this area down here around 205. So if it dumps out to 205, pivot low right here, secondary pivot low just above, that would be a potential day trade only level on Workday. Raw Stores is up slightly on the day. Notice again, it's not up a lot, so it doesn't really get my attention. But again, Raw Stores here, if we take a look, we can see it is kind of just been chopping sideways for a long period of time. There is a gap fill around 152.20, but it's too close to current price and it's not a big enough move, so I will not be looking to trade it. If this really got its mojo, maybe the high at 158.72 could be day tradable, but again, I'm not in love with it, but I just wanted to mention it. Zoom also up a little bit, but same thing, very minimal gain. The stock closed yesterday around 73. It's trading around 76. This chart actually is interesting because you have this beautiful kind of parallel trend line, right down here. And look at that. Look at how beautifully the chart was basically going back to May, holding the low of the parallel and then resistance at the highs. And this is a breakout on the Zoom chart. Now, remember, I don't buy when you get gap ups like this. This is really important education, by the way. I don't buy it. Like, I'm not paying, $3 higher on Zoom today just because it's a breakout. Now, some of you guys may say, well, it's a breakout. Well, that's okay. I don't mind missing a trade. The kicker here is, folks, is if once it breaks out, you look for, what do you look for? The retrace to the scene of the crime. We just went over this on IQ. If this chart comes back into this, which is also then a gap fill right there, then that's the buy. So again, entry, when you hear people say entry is everything, it really is. Like, you have people that are in trades that paid at the all-time highs, people paid at the lows, people paid in the middle. And in general, for me, I like to pay low. I like things on sale, right? When we go to the supermarket, I'm not rushing to pay, when eggs were like $7 a dozen, I wasn't rushing to be like, oh, I got to buy like 10 dozen eggs today, right? I mean, you don't say that. You say, you know what? Yeah, I guess we'll buy just 1 dozen now, but when the prices drop, we can buy more eggs, or heck, let's go get some chickens, right? That's what I'm doing. But anyways, neither here nor there. But the point is that I don't like paying up. When someone raises the price on something, I'm not going to buy it. But if it retraces and it was good earnings, I'm buying the retrace into technical support. Really important kind of psychological difference. Because most people, by the way, and this is something I hope you all can correct yourselves on, is, you pick up on the FOMO, right? The FOMO, the fear of missing out in social media. Like, people are just talking, oh, it's going to go to the moon. It's going to go to the moon. Well, generally, most things don't go to the moon overnight. Instead, they pull back, and then that's the buying opportunity, right? So anyways, back to the charts we go here. Into it, rolling over a little bit more pre-market. This stock's down decently on earnings. I do have a level that I'm going to be watching on Intuit today. It's around 618 right here. You can see the support level right there across and going back to March and to, early March and late March. And also even right here, there was a little breakout and then it started to rally. And so this tells me around this 618 level today, there should be some technical support, but again, only for a day trade on this one. Now, listen, one of the things I want to do more and more is I always read the comments that you guys post on the game plan, and they mean the world to me, right? Even criticism, I still take it as long as it's legit criticism and not just douchebaggery. That's fine. But again, my goal is to answer some of the questions. And so I have 3 questions today that people asked me that I pulled here, and I wanted to go over them quickly. One was, do you still think platinum is going down? And so let's go over to the platinum chart, and we'll take a look at platinum here, all right? Let's take a look at platinum. All right, so platinum obviously had a monster move, right? Monster move. I can get rid of this trend line here. But number one, if we take a look here, we can see that platinum had this beautiful longer-term upsloping trend line that it basically ran into right up at the highs of just under 1,500. Then you pulled back, and on the daily chart, if we flip back to the daily chart, what type of pattern is this? This would be a bear flag, right? So in general, the down move inside bar consolidation, this generally resolves itself to the downside, which is this direction. Okay, so yes, the chart, and it's not my personal opinion, it's just the chart, it's the bearish pattern, it favors the downside. It tells me this is going down. But am I a long-term bull on platinum? The answer is heck yes. Any metal and Bitcoin, I'm long-term because I don't believe that any government in the near term is going to fiscally be responsible. Once we get into a recession in the US, they're going to be printing money galore again. So when the Fed will lower rates, and it's all of that. And so the idea is that platinum is a rare metal, precious metal, and so we want to buy it on pullbacks. If this ever comes back to 1125, I'm going to start to load the boat there, and I would continue to dollar cost average into these previous pivots. By the way, there's nothing that says it has to fall back that far, but I do like that significantly. Okay, so that's one of the questions. Another one was, you didn't say anything about Coinbase. Okay, I'll answer Coinbase. So Coinbase is holding on to technical support here, but this is critical, guys. This is so important. Look at the support line here and over here. It has to hold this 299 to 300 level. If it breaks that, your next support is going to be around 265 to 270 on Coinbase. And my guess, this will be determined by what Bitcoin does. And so if Bitcoin continues to break lower, Coinbase likely is going to come down and break down. I would generally favor that outlook in the near term, even though I love Bitcoin in the mid to long term. All right. So again, in general, hitting support. If you're a bull on Coinbase, you want to see it hold 300 here. If it breaks, and by the way, it's right at 300 in the pre-market. If it breaks, watch out below. All right, last question. Last question of the day. Can you help me understand why supply side inflation is something to keep an eye on in terms of keeping rates up, or the Fed keeping rates up? The answer is this. So supply side, this is PPI, producer price inflation, right? Index. We saw the CPI was pretty muted, and then the PPI was very hot. So the reason why the Fed has to be concerned about this is because we know that tariffs impact shipping these goods from countries, which is on the wholesale, the producer side. And so you're now seeing inflation showing up pretty dramatically on the producer or the wholesale side. And the way this usually works with tariffs and with just supply side cost increases is that initially companies say, all right, well, we're not sure where these tariffs are going to end up. Is Trump going to, essentially do a deal and there'll be no tariffs? So we're going to not raise our prices yet. But now what we saw from Home Depot and from Walmart is they're now saying, hey, we now know there's certainty that 15% tariffs basically across the board are in play. We are going to have to pass some of this along. And listen, companies in a capitalist society are going to do that. They're going to want to, Walmart wants to have the best earnings possible. And so if they feel that they can pass along the cost of tariffs, they are going to do so. And listen, we all have to buy food. We all have to buy some stuff. So they probably can pass along those costs, which means eventually it comes into the consumer side. And so the idea is by keeping rates higher, you restrict money supply and you can kind of keep or tamp down a little bit of the inflation pressures in that situation. All right, good questions, guys. All right, let's get back to the charts here. Let's go to Bitcoin. We kind of touched on it with Coinbase. Bitcoin continues to move a little bit lower. I do have my next support coming up on Bitcoin at around 110,000. You can see this high pivot right through here, and that is a good level to watch to see if it holds. All right, so 110,000 wouldn't shock me if today or over the weekend we dip into that, if not early next week. And then the big question will be is, can we get a bounce? Now, again, the fact that we broke this down sloping trend line is of concern, no doubt about it. So be aware that we could get a bounce back. Don't be surprised if we go back to like 118,000. As long as we stay below this upsloping trend line, you got to be a little careful in the near term. Now, listen, long term, you zoom out on this chart, it's still very bullish. I mean, you can't deny it, right? So again, if you're a hodler, this is nothing to worry about. Maybe just utilize weakness as it goes lower. If Bitcoin goes lower and lower, you can always dollar cost average. But near-term investors and traders, if your outlook is a month out, yes, we're a little concerned about the price action in Bitcoin. Gold, let's get over to gold real quick here. Gold is inching down a little bit. Keep in mind, gold likely will have a big move on whatever Jerome Powell says, just like the dollar and rates will. All right. So again, I still think gold is a little bit in the short term. It looks a little weak to me, so I would still favor a little bit of downside there. And then next up, we have silver. Silver just continues to chop. I still have a good area of support right around this 34.65 level. It's not at resistance, which is 39.80. It's not at support. It's kind of in the middle, so nothing to do there. And then, of course, we just whipped through oil inching up a little bit. This could be a retrace to the scene of the crime situation where we move up here and then we get our next leg down. Needless to say, if we do, resistance will be heavy at $65.65. And then lastly, natural gas, folks. Again, for those of you that love to trade nat gas here, it is still in a weak position. Notice oil has bounced much better. Nat gas continues to show weakness. That tells me it still probably wants to visit its lows down here around $2.63. All right, guys. So listen, lots to digest today. And listen, we haven't even gotten to the biggest thing today, which is Jerome Powell's speech, which is just over 30 minutes away. So let's see what happens with the markets. I will be doing a Friday wrap-up video today. So again, that'll be on at 3:55 today Eastern time. So I will go over all the Fed stuff. Where did the markets end for the week? What the heck is going on out there going into next week? So make sure to come back. And as always, folks, come check us out at verifiedinvesting.com. We have lots of swing trade services there. We have our day trading room. We have it all: options, stocks, commodities, and crypto, all at verifiedinvesting.com. You want videos, you want technical analysis, it's all there. Have a good one, guys. Take care.